Today, I want to talk about how the SEC is finally addressing the halted squeeze in MMTLP. First, Hester Pierce was grilled today about MMTLP by Charles Payne, and tomorrow Gary Gensler will face a separate grilling, testifying in front of the House Financial Services Committee. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, first, let's hear what Charles Payne had to ask Hester Pierce about MMTLP and how she responded.
Is the plan to bail hedge funds out when they're failing? I don't want to be part of that. And so I think we need to be very judicious about what we ask for, because if we start asking for more, people are going to come asking the government for bailouts.
So I wanted to quickly touch on the fact that Hester Pierce is saying that hedge funds may need bailouts. She's saying that obviously she doesn't want hedge funds to receive bailouts like has been given to these banks, but she's saying that hedge funds may soon need a bailout. This is actually really interesting because it goes to show that hedge funds are actually struggling more than people would think. They're obviously struggling so much that Hester Pierce is debating bailing out hedge funds already. Now obviously this is something that would never go ahead because the banks barely receive a bailout, let alone these hedge funds. But as I said, it is interesting to know that actually many hedge funds out there are struggling and are likely already insolvent.
Well, but there's some hedge funds that, we'll know where they'll be here as long as the planet is here. They've gotten so large and so big. But let me ask you about this case, this MMTLP, which apparently the company was poised to offer a preferred dividend and the next bridge hydrocarbon. And about 4 days before all of this was going to start to go down, the stock was abruptly halted, then delisted. Investors' money had been frozen. There have been major complaints about fraud, the way the stock was traded. Apparently, there are transcripts between FINRA and the SEC that reveal maybe even regulators were aware of all of this. So how do you explain the injustice of this case?
I think the big issue that and I've certainly heard those concerns, and I think the big issue that we need to take from this is we need to do a better job communicating about what happens when certain actions happen in the market.
What happens with this particular case? Will they release the FINRA blue sheets for MMTLP? I mean, can we get a sort of post-mortem right now? People are talking about this. People say my money is frozen, that they see this as a deliberate attempt once again to derail regular investors.
Well, again, when people are having issues like that, I do encourage you to contact the SEC.
They contacted the SEC. Hester, that's why you're in the show. Please help us out here. I mean, this is the runaround. That listen, we were promised dark pools, pay for order flow. All of these things have been thrown up as the things that could be changed for the last 3 years. Are you waiting for individual investors to lose interest, to lose all of their money? They're not going to do either of those things, and still, it's the waiting game. The complaints have been filed. When do we get some action on those complaints?
Now, I also really like how Charles Payne here says that retail investors won't be getting bored and won't be selling their stocks. This is something we know and that is absolutely true, but it's something the SEC and these hedge funds still haven't got into their heads. But it is great to see Charles Payne mentioning it directly to the paid off SEC, letting them know that you guys, the SEC and these hedge funds will not win because we've already won. We won't be getting bored, we won't be selling our shares, and these hedge funds will have to buy back our shares at whatever price we set.
Well, I mean, there's one thing dealing with current issues, which again, I urge people to write in. It sometimes does take some time to sort through these issues, but we do take those inquiries seriously. In terms of the policy issues that you raised, I think we have to level set here, and I do believe that our equity market structure works quite effectively now for retail investors. Now, are there changes that we can make? Absolutely. Should we look at what those changes are? Absolutely. But we have to do things in a deliberate manner so that we don't break things along the way and end up with a worse market structure. We actually now have no commission environment. We have the ability for people to trade very much more easily and cheaply than they ever have before, and I don't want to lose that.
Yeah, well, listen, I would rather pay a commission not to be ripped off in a different kind of way. I mean, people are hip to all of this, so, and you sound like a hedge fund brochure when you say that. That's not the Hester that came on the scene a few years ago.
And there are certainly options for people who would prefer to pay commissions. I want to make sure that we have lots of different options in our market so that people who want commissions can pay commissions, people who don't have to.
All right, Hester, I really appreciate you coming on. Thank you very much, and
Thanks
hope to
for
hear from
having
you
me
again soon. Thanks. All right, folks, coming up, Daniel
It's also crazy to hear Hester Pierce here dismissing everything Charles Payne has just said about MMTLP and instead speaking about payment for order flow. She's ignored all of his questions and did not address MMTLP at all and said that actually you guys should just send letters to the SEC, as if we're not already doing that. She's basically trying to hop, skip and jump through every hoop to avoid answering questions about MMTLP and instead just addresses payment for order flow. She doesn't address the dark pools, she doesn't address what's happened to MMTLP or what's going to happen to MMTLP in the future, just says, guys, payment for order flow is great, trust me. But we also know that Gary Gensler is going to be testifying tomorrow in front of the House Financial Services Committee, where he will be questioned about MMTLP. I think this will be really, really interesting because while Hester Pierce can skirt around and jump through hoops to avoid answering Charles Payne's questions, Gary Gensler will not get off so lightly. It says here the SEC chairman Gary Gensler is expected to answer inquiries on MMTLP during a hearing on Tuesday, April 18th. Earlier this month, we found out that Congress was getting involved in the MMTLP scandal through a leaked letter sent out to the Metamaterials CEO. Congressman Bill Posey said in a letter that he's been hearing from a variety of constituents on retail's concerns involving MMTLP. And now as a result, Congressman Warren Davison has confirmed that SEC Chairman Gary Gensler will be questioned about MMTLP in front of the House tomorrow. And as Nate tweeted, he said maybe the House Financial Services Committee should also look into what's lurking in Wall Street's dark pools. Prior to Q3, Q4 of 2020, all trading was performed on public exchanges, or pretty much all trading. Whereas obviously since Q4 of 2020, the majority of trading is actually now happening in these dark pools. Dark pool trading went from being 1 to 5 or 10% of all trading volume to now being more like 50 to 60 to 75% of volume. And that's just the volume across the market as a whole. In some specific stocks like AMC, that trading volume is closer to 90 to 95%. And as Genevieve tweeted, this is all happening at a time when Apple is launching a high yield savings account. The Apple savings account is offering a 4.15% interest rate. And she said, meanwhile, the average savings account interest rate in America among the top major big banks is just 0.37%. And she said, is Apple turning into the new JP Morgan? But as Astro tweeted, he said, when the most valuable public company in the world begins opening savings accounts to get in additional revenue, despite being the biggest beneficiary of numerous tech bull runs in history, he said that should give everyone a clear signal what kind of disaster of a market we're about to head into. Apple is obviously trying to prepare for something where they think they're going to need tons and tons of cash, and they won't be able to raise that cash through the stock market, through issuing new shares or issuing debt. As Astro is saying, maybe that's because the next leg of the market crash is about to unfold, and Apple knows that they're going to need tons and tons of cash. Even though Apple has been on the benefiting side of a number of bull runs in history, they're clearly still worried about what's going to happen. And Mr. David Neo thinks that he's figured out exactly what's going to cause the next leg down. He said, you're not going to believe this, but data analysts say that algos or algorithms have lost control. And he said there's a transfer of power in progress. If these algorithms have lost control of the market and they're spiraling out of control trying to push the market up, when it effectively needs to fall, it's only going to lead to a bigger explosion. He said, in short, buckle up, because if these algorithms have lost control, it's only a matter of time before the market ends up imploding, and these algorithms trying to suppress AMC and GameStop end up exploding as well. And when that happens, the wider market will fall significantly, especially big tech companies, and as a result, AMC and GameStop will end up squeezing. And we know that actually many hedge funds are still on the wrong side of this trade, and still continue to be on the wrong side of this trade until today. As Tavi Costa tweeted, he said call option volumes surged again to an all-time high this last quarter. Basically saying that hedge funds and institutions are still taking out tons and tons of call options, likely through their algorithms, expecting the market to go up. He said this level of interest in derivatives is highly associated with the current retail trading frenzy. And he said, to be clear, this is not representative of a market bottom, and the bottom is still likely to come in just a few short weeks or a few short months' time. These institutions are still betting the market will go up, which is effectively what's been pushing the market up over the last few weeks or the last few months. But as these algorithms have lost control, that's soon all going to come to an end at a point when these hedge funds are the most long on the market that they've ever been. He said, yes, the explosive growth in very short-term contracts also played a role, but broadly speaking, this is one of the most speculative environments in history. All these hedge funds and these market makers and these institutions are still massively and irresponsibly long on the market, longer now than they've ever been. And when this explodes, it will explode in a magnificent fashion, crushing the S&P 500 and causing the squeeze in AMC and GameStop. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.